While it seems expedient to pay your mortgage a lot faster as opposed to just making the minimum monthly payment, it is actually more financially beneficial to just make the minimum payment. In this scenario, you have a starting balance where you still owe $100,000 towards your home and your monthly payment is $500. As you can see, part of the payment goes to principal, the other part to interest. Now, assuming an interest rate of 4%, which is roughly what the current market is, you can see that as you pay it each year and you apply more to principal, your annual interest starts to dwindle. Now, if you were to be able to afford to pay $1,000 a month, so you add an extra $500 each month towards principal, watch what happens to the annual interest. You end up paying less in interest each year, so it drops down even more. However, there is something you can do that will benefit you more financially than paying down your mortgage sooner. Over here, I have a scenario where there's a stock that you trade that's $10 a share and gives you a 10% yield each year based on the dividends they pay out. Now, you may think this is unrealistic, but you have trusts, and many of them pay monthly dividends that pay even more than 10%. There's one that I've been buying that's around 10 a share and pays around 16% of their value in dividends, and they've held their dividends steady the past couple years. So as you can see, it is realistic. And even though you can earn or average in gains 10% with growth stocks that give you capital gains, you have a better cash flow with the trusts that give you higher dividends. So as you can see, when you start out, you're still paying more in interest than you are in gaining in dividends. But over time, you end up, as you can see, you end up gaining more in dividends than you are paying in interest, so you end up with a net gain. Now, suppose you had $100,000 to just pay off the mortgage at once. Is that a good idea or not? We'll see. As you can see, you can just go ahead and take that $100,000 and earn a higher return in the market than you can just using that to pay off your mortgage faster. So as you can see, it is not the best financial decision to pay off a mortgage sooner. And as you can see over here, I have put what you're paying in interest and what you're earning in dividends. And although at first you are paying more in interest, over time you're actually earning a gain. And as you can see in this scenario where I just ran it out to 12 years, you end up netting a much higher return over time. Now, as you can see, what you're paying in interest will slowly dwindle over the years, so it's a gradual decline. But what you're earning in dividends is gaining a lot faster, so it is much better to invest your money that you can use towards paying down a mortgage faster and earn a higher return than what you are in paying interest on that money that you would have paid down the mortgage with faster. So I hope you like this video, and thanks for watching.